Welcome to Deep Dive Library, the show where we, really break down books, decode those insights, and basically turn pages into power.
That's the idea.
Each time, we unpack one impactful book, pulling out the key takeaways, those real-world lessons, and the kind of aha moments that, let's be honest, summaries often miss. So if you're all about deep learning from the books that shape entrepreneurs, creators, thinkers, well, you're in the right place.
And today, we're definitely not just skimming the surface. We're diving deep into a book that I think it's fair to say has really reshaped how a lot of people approach strategy, blue ocean strategy.
Exactly. W. Kim and Renée Mauborgne, they've put together something genuinely powerful here. It's not about getting bogged down in, abstract theory, is it?
No, not at all. It feels much more like a hands-on guide, really. It helps you understand how businesses can generate completely new opportunities instead of just, duking it out in the same old markets.
Right, fighting over the same pie.
Our goal in this deep dive, then, is to kind of extract the core essence of blue ocean strategy and show you how its principles can be a real game changer for creating uncontested market space, not just competing for a slice of what's already there.
Think of it as your accelerated path to strategic thinking that goes beyond the usual suspects.
That's a good way to put it. Accelerated but thorough.
Okay, so let's jump right in. The book kicks off with this really vivid contrast, doesn't it, between blue oceans and red oceans. Can you paint us a picture?
Yeah, sure. Imagine the whole business world as two kinds of waters. Red oceans, that's all the industries we know today. The existing market space.
The familiar territory.
Exactly. The boundaries are defined, everyone knows the rules of the game, and companies are basically fighting tooth and nail to get ahead of their rivals, trying to grab a bigger share of the existing demand.
That's pretty intense.
It can get pretty cutthroat, yeah. Lots of competition, often similar products, and like the name suggests, it can become a bit of a bloody red ocean as businesses battle for survival.
And the key point isn't just that there is competition.
No, it's that constantly fighting for the same customers ultimately caps your growth potential, Blue oceans offer a way to get around that limit.
That sounds like a tough place to be stuck. So the alternative then is the blue ocean, this untapped potential.
Precisely. Blue oceans are all the industries that don't exist yet. The unexplored market space, the unknown.
Okay.
This is where you find new demand being created and the potential for really significant profitable growth. Now, what's really interesting and maybe a bit counterintuitive is that while some blue oceans pop up in completely new areas, most actually emerge from within those red oceans.
How so?
By stretching the existing industry boundaries. It's not always about inventing something completely out of the blue, something nobody's ever dreamed of.
Okay. That's a crucial point. It's more about reframing what's already there. And the book uses Cirque du Soleil as just a brilliant illustration of this. For anyone who hasn't heard their story in this context, what's the key takeaway?
Oh, the Cirque du Soleil story is fascinating. They started out as street performers, right? Back in the early 80s. And this was when the traditional circus industry was, it was really struggling.
Yeah, I remember hearing that. Not exactly booming?
Not at all. Standard business thinking would have said, look, shrinking market, powerful star performers demanding high salaries, more entertainment options for people, just general waning interest.
Right, all the signs pointing downward.
Exactly. And the big players, like Ringling Bros, they were mostly focused on offering slightly smaller, maybe cheaper, versions of the same traditional circus formula. But Cirque du Soleil, they didn't try to beat them at their own game.
They didn't just try to build a better mousetrap, so to speak.
Oh, in less than 20 years, their revenues just skyrocketed. They reached levels that took the established giants over a century to achieve.
Wow. And the secret?
Their secret was they didn't steal customers from that shrinking circus market. They created a completely new, uncontested market space. They essentially made the traditional competition irrelevant.
Making them irrelevant. That's powerful.
It really is. Think of it as creating this win-win, not a trade-off. It's about creating so much value for the customer that price becomes less of a deciding factor, while at the same time streamlining your operations for cost efficiency.
Okay, so how did they actually pull off this reinvention? What did they do?
Well, they appealed to a totally different audience. They went after adults, corporate clients, people willing to pay a premium for a unique, sophisticated entertainment experience.
Not the traditional family audience for circuses.
Right. And their strategic move was really inspired. They blended the fun, the excitement, the spectacle of the circus.
The stuff people still like.
Yeah, the core magic. But they blended it with the sophistication, the artistic depth of theater.
So they took appealing elements from both worlds.
In a way, yes. But crucially, it was just as much about what they strategically got rid of and reduced.
Okay, like what?
They eliminated really costly traditional circus elements. Things like the animal acts, the star performers, the kind of chaotic three-ring setup, even those aggressive concession sales.
Right, the stuff that cost a lot and maybe felt a bit dated anyway.
Precisely. Cutting out big expenses and some of the, more dated aspects, but they kept the core magic. The tent. Definitely the tent. The clowns.
Still had clowns.
Yeah, but reimagined, more artistic, more engaging, less slapstick maybe.
Yeah.
And the breathtaking acrobatics, they actually enhanced those with theatrical flair.
Okay, so kept the good stuff, enhanced some of it.
And then they added elements from theater that were completely new to the circus world. Things like a storyline, a narrative thread, original artistic music and dance, multiple productions running, each with different themes.
Resulting in something that wasn't really pure circus or pure theater, but this captivating hybrid thing that drew in a completely new audience.
Exactly that. By reconstructing all these industry elements, Cirque du Soleil just smashed that conventional value-cost trade-off we were talking about.
Right, the idea you have to choose high value, high cost, or low value, low cost.
Yeah, they broke that. They offered a differentiated high-value experience that attracted this new customer base willing to pay more, while at the same time lowering their costs by getting rid of those traditional circus staples. They just weren't playing the same game as the competition anymore.
It's such a powerful example of how blue oceans focus on creating new demand, not just battling over the customers who are already there. And like you said, the book really emphasizes that these blue oceans often arise from within those red ones by looking at alternatives.
Absolutely. It's about expanding the boundaries of what you even consider your industry. Like Cirque du Soleil, looking at the alternative of theater, right? The authors highlight that over the past century, and even more recently, loads of multi-billion-dollar industries have emerged seemingly from nowhere: cars, recorded music, mutual funds, cell phones. The list goes on.
Things we just take for granted now.
Exactly. These weren't always distinct, clearly defined sectors from the start.
It really makes you think about the industries we see today, how they might be completely reshaped or even lead to entirely new markets down the line. The book also points out how traditional strategic thinking has largely focused on competing in those red oceans, hasn't it?
That's right. For the last quarter century, at least, the main focus in strategy has been on competition-based red ocean strategies. We've gotten really good at analyzing industry structures, choosing positions, low cost, or differentiation within existing markets, benchmarking against rivals.
All the standard MBA stuff.
Pretty much.
Yeah.
But there's been significantly less practical guidance on how to actually go out and create those blue oceans.
And that's the gap this book tries to fill.
Precisely. That's what Blue Ocean Strategy aims to deliver. Actionable frameworks, practical analysis for systematically pursuing and capturing new market space.
Which brings us to this key shift in perspective. The book advocates moving away from focusing primarily on the company or even the industry, and instead zeroing in on the strategic move. Why is that distinction so important?
Yeah, this is a really interesting point. The authors argue that the strategic move, which is like the whole set of management actions and decisions involved in creating a major market-creating business offering, that's the right lens for understanding how blue oceans get created and how companies achieve sustained high performance.
Not the company itself.
Not necessarily. Business literature often focuses on entire companies, right? Trying to identify these great or visionary companies that consistently outperform everyone else.
But the book kind of pushes back on that, highlighting how even really successful companies can stumble.
Exactly. They point to examples from popular business books that celebrated certain companies as perpetually excellent, only for many of those same companies to face serious trouble or even disappear not that long afterwards.
Right, things change fast.
It suggests that long-term high performance isn't necessarily about the inherent, enduring greatness of one specific company or its industry. It's more about these individual strategic moves that unlock new market space and new demand.
So even if a company gets acquired or changes dramatically later on, a successful blue ocean strategic move can still have a lasting impact.
Absolutely. They use Compaq as an example. Now, Compaq was eventually acquired by HP, right?
Right.
But Their strategic move in creating the server industry back in the day, that was a massive blue ocean move in its own right. It fueled a huge comeback for Compaq in the mid-90s, and more importantly, it opened up this multi-billion-dollar market space in computing that just wasn't there before.
So the success of the move stands on its own.
Exactly. The success of that strategic move isn't diminished just because the company itself didn't remain independent forever. The bill even points to historical patterns. Look at the auto industry, computing, cinema, showing that no single company or industry stays dominant forever. It's these groundbreaking strategic moves that really drive new growth.
This idea of the strategic move really does reframe how you think about innovation and lasting success. And at the heart of these successful moves, the book introduces this absolutely central concept, value innovation. Can you tell us more about what that entails?
Yeah. Value innovation. It's basically the cornerstone, the bedrock of blue ocean strategy. It's the strategic logic that really separates the blue ocean creators from those stuck competing in the red oceans.
Okay.
So instead of focusing on beating the competition, the goal is to make the competition irrelevant.
Irrelevant. That's a bold goal.
It is. And you do it by creating a significant leap in value, a leap in value for both your buyers and for your company. That's how you open up new, uncontested market space. It's that win-win idea again, not a trade-off.
Right. Creating so much value for the customer that price isn't the main issue, while also managing your costs.
Exactly. It's not just about offering slightly better value than the competition within the existing industry structure.
It's about breaking free from that structure entirely.
Precisely. The term itself, value innovation, really underscores the equal importance of both value and innovation. You need both.
How so?
Well, you can have innovation without value, right? Think of purely tech-driven advances that don't really solve a customer problem or the customers just aren't willing to pay for.
Tech for tech's sake.
Kind of. And conversely, you can have value without much innovation, just incremental improvements, slightly better versions of existing stuff that doesn't really make you stand out or create a blue ocean.
So true value innovation is that sweet spot, that intersection where those two things powerfully connect.
Exactly. And the book stresses that value innovation isn't necessarily about like bleeding edge technology or always being the first mover.
Oh, that's interesting.
Yeah, sometimes it involves those things, sure, but often it doesn't. Value innovation really happens when a company aligns its innovation with utility, how well the offering solves a problem or meets a need with price, making it accessible to a wide range of buyers, and with its own cost position, making sure it's profitable.
Utility, price, and cost.
Got it.
And this is where they challenge that traditional strategic thinking, right? That you have to choose between offering higher value at a higher cost or reasonable value at a lower cost.
Exactly that. Those pursuing blue oceans deliberately aim to achieve both differentiation, meaning a significant jump in value for buyers, and low cost simultaneously. They refuse to accept that value cost trade-off.
Like Cirque du Soleil again.
Perfect example. They differentiated themselves massively with that sophisticated artistic experience, attracting a new audience willing to pay more than for a traditional circus. And at the same time, they dramatically lowered their cost structure by ditching the expensive animal acts and star performers.
So it's about being distinctly different and cost-effective, but in a way that really clicks with a new group of customers. Now, the book also outlines some key characteristics of a strong blue ocean strategy. What are those indicators? What should we look for?
Yeah, they highlight 3 key characteristics that kind of act as a litmus test for whether a blue ocean idea is commercially viable. The first one is focus.
Focus.
Meaning, a successful blue ocean strategy doesn't try to be everything to everyone. It doesn't spread its efforts thinly across all the traditional competitive factors in the industry. Instead, it concentrates, it focuses on just a select few key factors where it can create a significant leap in value.
That makes sense. Trying to excel at everything often means you're just mediocre across the board. Okay, what's the second characteristic?
The second one is divergence. A company with a strong blue ocean strategy will have what they call a value curve, which is basically a graph showing its offering across those key competitive factors.
Okay.
And that value curve will look noticeably different from its competitors. It diverges. This difference comes from looking beyond the existing competition, looking at alternatives, looking at non-customers.
So if you plotted their strategy on a chart, it wouldn't just follow the same pattern as everyone else.
Precisely. It shouldn't just be a slightly tweaked version of what everyone else is doing. It needs to stand apart. And the third characteristic is a compelling tagline.
A tagline, like a marketing slogan. Sort of, but it's more fundamental than just marketing. It's a clear, concise statement that communicates the very essence of the strategy and its unique value proposition to potential buyers. It should be easy to grasp and immediately capture what makes the new offering special.
Like the yellowtail wine example you mentioned earlier.
Exactly. A fun and simple wine to be enjoyed every day, bang. You immediately get what they're about and how it's different from traditional, perhaps more intimidating wines.
Focus, divergence, and a compelling tagline. Those sound like really practical criteria for testing a potential blue ocean idea. Now, to help companies actually develop these strategies, the book introduces some tangible frameworks. Let's start with the strategy canvas. What is that and how does it help?
Right, the strategy canvas. It's a really powerful tool, both diagnostic and action-oriented, for crafting these compelling blue ocean strategies. It's essentially a visual framework.
A visual?
Yeah. Along the horizontal axis, you list the key factors that the industry currently competes on, things like price, specific product features, service levels, maybe marketing spend, whatever is relevant.
Okay, the things everyone battles over.
Exactly. Then, on the vertical axis, you plot the relative offering level, high or low, that different players provide across each of those factors.
So you can literally see where companies are putting their energy and resources and how they stack up against each other.
Exactly. It visually reveals where the competition is currently focused, what they're investing in, and you can map out the strategic profiles, the value curves of the major players.
So you can see where they overlap.
You see where they converge, yeah. And more importantly, by seeing where everyone is, you can start to see where they aren't. It helps you spot potential gaps, areas where you could diverge and create new market space.
It sounds like a really effective way to get a clear, objective overview of the competitive landscape. But crucially, from the buyer's perspective, the book emphasizes that point, right? Defining those competing factors based on what customers actually care about, not internal company jargon.
Absolutely crucial. You have to look at it from the outside in. If you're listing factors using technical terms or internal metrics that don't actually resonate with buyers, you're likely missing the whole point.
And what does a typical red ocean strategy look like on this canvas?
Well, a red ocean strategy, when you map it out, often shows converging value curves. Everyone's lines basically follow the same pattern, maybe slightly higher or lower on certain points, but the overall shape is similar.
Competing on the same stuff in roughly the same way.
Pretty much. You might also see a lack of clear focus. Maybe the line is high across too many factors, indicating diffused effort. Or contradictory profiles, high on some things that cancel each other out. And usually an internally driven orientation rather than one focused on creating new value for buyers. The strategy canvas really helps you spot these red ocean traps and see the potential unserved needs ripe for a blue ocean.
Okay, so you've mapped out the existing landscape using the canvas. You see where everyone is clustered. What's the next step in actually forging that blue ocean? That's where the 4 actions framework comes in, right?
Exactly. The 4 actions framework is a really potent tool designed specifically to help companies break that value cost trade-off and develop a new divergent value curve.
How does it do that?
It challenges you to fundamentally question the deeply ingrained assumptions within your industry. It does this by prompting you to ask 4 key questions about each of those competitive factors you identified on the strategy canvas.
Okay, lay them out for us. What are these 4 critical questions?
Right, the 4 actions are: first, raise. Which factors should be raised well beyond the current industry standard? Second, eliminate. Which factors that the industry has long competed on or takes for granted should be eliminated entirely?
Okay, raise and eliminate.
Third, reduce. Which factors should be reduced well below the industry standard? Maybe they're overserved or too costly for the value they provide. And fourth, create. Which factors should be created that the industry has never offered before?
Raise, eliminate, reduce, create. It sounds like a really practical and quite challenging set of questions. Forces you to fundamentally rethink every single aspect of the traditional offering.
Precisely. It's designed to do exactly that. By systematically applying this framework, companies can move beyond just making incremental improvements, tweaking things here and there, and identify a truly differentiated strategic profile. It pushes you to consider not just doing things better, but doing fundamentally different things.
Different things that generate new value for buyers and hopefully lower your cost structure by eliminating or reducing other things.
That's the core idea: value innovation through reconstruction.
And the book uses the example of yellowtail wine to really bring this framework to life. For those who might not know the yellowtail story that well, what did they do using these 4 actions?
Yeah, Yellowtail's a great case study. Casella Wines, the company behind it,
used this framework brilliantly to carve out a massive blue ocean in the very crowded, very traditional Australian and US wine markets.
Which were definitely red oceans, right?
Oh, absolutely. Very established players, complex terminology, often intimidating for casual consumers. Instead of just offering another wine, Casella aimed to create more of a social drink, something accessible and fun for everyone, including beer drinkers, cocktail drinkers, people who didn't normally drink wine at all.
So their primary target wasn't even the traditional wine connoisseur.
Not initially, no. They looked at the alternatives beer, ready-to-drink cocktails, and applied the 4 actions. So what did they raise? They raised ease of drinking, making a wine that was intentionally simple, fruity, not complex or tannic. They raised ease of selection, simple, vibrant labels, only 2 initial choices. And they raised the sense of fun and adventure around the brand.
Making it much more approachable, less intimidating for the average person wandering the wine aisle. What did they reduce or eliminate?
They significantly reduced or outright eliminated things that traditional wine drinkers might value, but that non-wine drinkers found confusing or off-putting. Things like tannin levels, oak complexity, the need for aging, which also conveniently lowered their production costs.
Sorry.
They eliminated the complex wine terminology on the bottle, the huge range of different varietals and vintages that often overwhelmed consumers. And they eliminated that traditional, sometimes stuffy or pretentious image associated with wine. They weren't trying to impress the wine experts.
Okay, focusing squarely on simplicity and accessibility. And what did they create? What was new?
Well, they created a wine experience designed for this new audience. The wine itself was specifically crafted to be uncomplicated, fruity, easy to like. They created that iconic, simple, colorful kangaroo label that just popped on the shelf.
Instantly recognizable.
Totally. They created an initial product line of just 2 wines, a Chardonnay and a Shiraz. Super simple choice. And they even did things like create branded Australian Outback-style clothing for retail staff to wear, turning them into ambassadors for this fun, approachable brand identity.
That's a really clever touch. So by raising the ease and fun factors while reducing complexity and eliminating the intimidating stuff, they created something entirely new. And that tagline fits perfectly. A fun and simple wine to be enjoyed every day.
Exactly. It hits all those marks.
Yeah.
Focus, simplicity, fun, divergence, completely different profile from traditional wines, and a compelling tagline. And crucially, Yellowtail didn't just steal market share from existing wine brands. They massively expanded the overall market by bringing in all those non-wine drinkers. It's a prime example of applying the 4 actions framework to achieve value innovation and create a blue ocean.
This has been incredibly insightful. It really breaks down how these concepts work in practice. Now, the book lays out 6 core principles for creating blue ocean strategies overall. We've touched on some of the tools already. Can you give us a quick overview of these 6 principles?
Sure. The 6 principles provide a kind of comprehensive roadmap for systematically creating and capturing blue oceans. It covers the whole process, really, from finding the opportunity to making it happen.
Okay.
We've already delved pretty deep into the first principle, which is reconstructing market boundaries. That's about looking beyond the traditional limits of your industry to find uncontested space. And it's key for minimizing the search risk.
Right, finding where to look.
The other principles include things like focusing on the big picture, not the numbers, using tools like the strategy canvas, reaching beyond existing demand, tapping into non-customers, getting the strategic sequence right, ensuring viability through utility, price, cost, and adoption, overcoming key organizational hurdles, dealing with internal resistance, and building execution into strategy from the start.
That sounds like a really integrated approach. Let's maybe delve just a bit deeper into that first principle, reconstructing market boundaries. The book introduces this 6 paths framework as a structured way to do this. It sounds like a really practical method for breaking free from conventional thinking.
It really is. The 6 paths framework offers 6 distinct angles or perspectives through which companies can systematically look at their markets to uncover potential blue ocean opportunities. And the book emphasizes again that these opportunities aren't usually hidden secrets requiring some amazing foresight. They often come from looking at familiar data just through a new lens.
Okay, let's walk through these 6 paths briefly. Give our listeners a sense of how they might apply them. What's the first path?
The first path is to look across alternative industries. This means looking at industries whose products or services have different forms, but offer similar functionality or achieve the same objective for the customer.
Okay, alternative. Like?
Think about why customers make trade-offs between, say, restaurants and cinemas for an evening out. Or, the book uses NetJets. They looked at the alternatives corporations had. flying commercial first class versus buying their own private jet.
Big difference in cost and convenience there.
Huge. NetJets created fractional jet ownership, capturing the convenience and speed of private jets, but at a cost closer to commercial first class for frequent flyers. They offer the best of both alternatives. NTT Docomo's iMode in Japan looked mobile phones and the internet. Home Depot looked at hardware stores versus hiring contractors. The core idea is asking, what are the real alternatives your potential customers consider, even if they look very different from your offering, and why do they choose one over the other?
That makes a lot of sense. Understanding the broader landscape of how customers are actually getting a job done or meeting a need. Okay, what's the second path?
The second path is to look across strategic groups within industries. Most industries have these sort of clusters of companies that pursue similar strategies, right? Think budget airlines versus full-service legacy carriers, or luxury car brands versus economy brands.
Right, different tiers or approaches within the same industry.
Exactly. Blue oceans can often be created by understanding why customers trade up or down between these strategic groups. What are the key factors driving that choice? Then you build an offering that captures the decisive advantages of different groups while eliminating or reducing everything else.
Can you give an example?
Curves, the women's fitness franchise, is a good one. They looked at traditional health clubs, expensive, maybe intimidating, lots of equipment, and home exercise programs. Cheap, convenient, but maybe less motivating. Curves combine the key benefits fixed machines for ease of use, like home equipment, and a supportive group environment, like clubs, but eliminated things like pools and showers to keep costs way down. Ralph Lauren blended high fashion prestige with classic, accessible styles. Lexus offered Mercedes quality at a lower price point. It's about bridging the gap between existing strategic groups.
So identifying the key attractions of different tiers in your own industry and finding a clever way to combine the best bits in a new, compelling package. What's path number 3?
The third path is to look across the chain of buyers. In many transactions, there isn't just one buyer. There's often a chain. The purchaser who pays, the user who actually consumes it, and maybe influencers who advise. Companies often focus their attention predominantly on one group in this chain.
Like focusing only on the person signing the check.
Right, or maybe only the end user. I believe ocean opportunities can emerge by shifting your focus to a buyer group that the industry has traditionally overlooked. Canon, for example, created the huge market for small personal desktop copiers by targeting the user's secretaries, small business owners, rather than just the corporate purchasing departments that bought the big, expensive machines. SAP shifted the focus of business software from individual functional managers to the corporate IT decision makers who wanted integrated systems.
Thinking about who else interacts with or benefits from your product or service and asking if their needs are being ignored. Okay, path number 4.
Path 4 is to look across complementary product and service offerings. Very few products or services are used in total isolation, right? There's often a whole ecosystem of related things that affect the total customer experience.
Like needing software for your hardware or ink for your printer.
Exactly. Or think about going to the movies. You might need parking, a babysitter, maybe dinner beforehand. The value of the core offering can be significantly impacted by these complementary bits. Blue oceans can be created by thinking about the total solution buyers are seeking and addressing pain points or gaps in those complementary areas.
So broadening your view beyond just your product.
Yeah. Nabi, a bus manufacturer, didn't just sell buses. They focused on the total life cycle cost for municipalities, including things like maintenance, fuel efficiency, and ease of repair, which were huge pain points beyond the initial purchase price. Philips created a kettle with a built-in water filter because limescale and tap water was a common problem affecting the taste of tea. Borders and Barnes & Noble created a whole lifestyle experience around books, adding coffee shops and comfy chairs.
Expanding your perspective to the entire customer journey and looking for related problems to solve. What's path number 5?
The fifth path is to look across functional or emotional appeal to buyers. Industries often orient themselves primarily around one type of appeal. Some compete mainly on function and price, what the product does. Think hardware, commodities. Others compete mainly on feelings and emotion, how the product makes you feel. Think fashion, luxury goods.
Okay, function versus feeling.
Right. Blue oceans can often be created by challenging this orientation. You can inject emotion into a typically functional industry, or strip away emotion and add rationality to an emotional one. QB House in Japan radically changed the barbershop industry, traditionally somewhat emotional, a place for a chat into something purely functional. A quick, no-frills 10-minute haircut at a low price, indicated by traffic lights outside.
Wow, that's different.
Totally. Conversely, Cemex in Mexico transformed cement, a purely functional commodity, by creating the Patrimonio Hoy program, which added emotional appeal by helping low-income families save and plan together to build their dream homes. Viagra added lifestyle enhancement appeal to a medical treatment. Starbucks added huge emotional and atmospheric appeal to the functional act of buying coffee.
Rethinking that fundamental value proposition, logic or emotion, and seeing if there's an untapped opportunity by flipping it or blending them differently. Okay, and finally, the sixth path.
The sixth and final path is to look across time. This one is about looking at external trends that are shaping your industry and projecting how they might change the landscape. The key is to identify trends that are decisive, irreversible, and following a clear trajectory.
Not just fleeting fads.
Exactly. You need to find those significant long-term shifts. Then you ask, what will the market look like when this trend reaches its logical conclusion? And how can we create unprecedented value based on that future state? Apple's iTunes is a classic example. They saw the irreversible trend of digital music piracy and online sharing growing, and they created a legal, convenient, and appealing way for people to buy digital music, shaping the future of the industry. Cisco Systems anticipated the explosion in demand for data exchange over networks.
So it's about actively anticipating the future based on clear trends and building a strategy around where things are headed, not just reacting to where they are right now. This six paths framework seems like a really actionable toolkit, doesn't it, for actively seeking out those blue ocean opportunities?
It really is. And the key message throughout, as the book emphasizes, is that companies need to actively look across these boundaries. You can't find blue oceans if you stay confined within the traditional limits and assumptions of your existing industry and competitors.
You have to consciously break out of that box.
Absolutely. It requires a deliberate effort, asking those fundamental why questions. Why do customers trade across alternatives? What's the appeal of different strategic groups? Whose needs in the buyer chain are unmet? What happens before, during, and after our product is used? Is our industry appeal primarily functional or emotional? Where are the decisive trends taking us?
This has been a truly illuminating deep dive into the core principles of Blue Ocean strategy. It offers such a compelling and practical framework for thinking about growth and innovation in a completely different way.
It really does. The central message is powerful. By systematically exploring untapped market space and focusing on value innovation, companies really can make the competition irrelevant and unlock significant new pathways for profit and growth.
And for you, the learner, listening in, we hope this deep dive has given you a valuable and hopefully actionable understanding of these core ideas. Maybe some practical tools you can start thinking about applying in your own field, your own endeavors.
Definitely. So as you reflect on your own work, your own industry, maybe ask yourself, which of these six paths feels like it might hold the most immediate or compelling blue ocean opportunity? What are some of those taken for granted assumptions in your field that maybe, just maybe, could be challenged?
Yeah, and who are the non-customers out there, the people who aren't currently buying from your industry? Could you attract them by offering a fundamentally different kind of value?
Powerful questions to ponder.
Absolutely. We definitely recommend delving into the book Blue Ocean Strategy itself for a much more in-depth understanding of all these tools and principles. It's one of those books that can genuinely shift your perspective on the whole competitive landscape. Thanks so much for taking this deep dive with us today.
Yeah, thanks for joining us.